growing up in Colorado, really the only natural disaster we had to worry about was wildfires. And there's an interesting fact about wildfires that actually reminds me a lot of some of the sell-offs we've had in the stock market over the last couple weeks. And in today's video, that's exactly what I plan to talk to you about, is how sometimes the sell-off is healthy. And I'm Zachariah Montera, here with Fross and Fross Wealth Management. And before we get started, please just make sure that you review any of the disclosures that are found within the email that this video was sent to you in. And if you happen to be watching on social media, please just go to our website at www.frossandfross.com and read any of the disclosures there within. So back to my story about Colorado. So if you've ever driven on Interstate 70 from Denver to go up to the mountains, let's say you're going to Breckenridge or Vail to go skiing, you've probably noticed that along the road there's a lot of these pine trees that are dead, and they've been piling up there over the years, mostly because of what's called a pine beetle that eats them and just leaves them there dead. But also, there's an interesting thing where it's been built up because they kind of stopped and moved away from doing controlled burns because of how dry it is there, and also because of the potential damage it could bring to a lot of the properties there, which makes sense. However, the one fact about a forest fire is that it's actually a very healthy process for the forest in the long term, because the pine cone, the seeds within the pine cone don't actually get released unless they're exposed to heat. And in the same way, the stock market sometimes needs that heat to be released as well so that it can actually benefit the rest of the overall market. And you see that's exactly what's happened, and we've started to see over the last month, is that the stocks that have really governed the market over the last 2 years since the Federal Reserve raised interest rates to the level that they're at now, that would be Facebook, Google, Apple, Microsoft, Nvidia, Tesla, to some extent. And these companies have really driven the market. And one of the newest sayings was, as Nvidia goes, so goes the market. And that's really been true for the last year and a half. But what we've started to see over the last couple weeks is a quick repricing, with expectations of the Federal Reserve starting to lower interest rates at some point in the next couple months. And it seems to be that with the Goldilocks scenario of the economic data that continues to come out, that's not too bad, not too good, and inflation coming in a little bit lower, it seems like the Federal Reserve finally has enough data to actually back up an interest rate cut. And so the market quickly priced that in, and it moved and had a sell-off from some of these top names like Nvidia to some smaller companies that really have lagged the return of the S&P 500 overall. And is that necessarily a bad thing that there was a sell-off over the last couple of weeks? Well, if you look under the hood, it's really just a broadening out. So since these companies have done so well over the last couple years, it's natural that it would make sense to maybe take some of the gains off the table and start moving them to these other companies that haven't really benefited as much. And in the same way as the wildfire is actually healthy in the long term for the forest, some of these sell-offs and pockets of volatility that we get is actually very healthy for the broad market overall. And for anyone who has a diversified portfolio outside of those 7 names, it is very helpful and beneficial in the long run for the market to continue to do that, where we have some of this rotation go from large caps to small caps. And so hopefully that actually continues a little bit, because we want to see the market broaden out, and we don't want it to just be continuing that only 7 companies are driving the return of the market for the rest of eternity. We definitely don't want that. That would not be healthy. And so this has actually been a good thing. It's been healthy. We're going to continue to monitor economic data that comes out. We look at those speedometers that we review, and make sure that you come to our halftime report here, where Patrick Fross will be speaking here at the Everglades. So make sure that you're registered for that. We plan to go over a lot of these uncertainties and election implications on your investments here next week. And so make sure you're registered for that and show up. And if you happen to live remotely or outside of Florida, we'll definitely be recording that as well for all of you outside of our local area here. So if you have any questions, or if there's anything out there with some of this uncertainty and election volatility, that is keeping you up, please reach out to your advisor here at our firm. We're here for you to guide you in this process, but it seems that over the last couple of weeks, this sell-off has really just been a good, healthy thing for the market, and hopefully it continues to go that way. And until next time, hope you all have a great rest of your day.